Good morning, traders. I'm Michael Sabo, Senior Commodities Broker with RJO Futures here in Chicago on Wednesday morning, September 18th, with some commentary here in the energy markets. So let's get started. Crude prices here started off mostly weaker this morning. We were dipping down below 105 a barrel. Brent was trading around 108 a barrel. And we had EIA data come out this morning, and we were trading around Novi Oil was trading around 105, 110 area. And, you know, most traders were looking for a draw in the neighborhood of about 1 to 1.25 million barrels. And the draw came in much bigger than that. The draw came in about 4.2 million barrels. And that really caused crude prices to start moving higher. We actually made a new high on the day. We took out this morning's high, and crude prices were up about $1, but still trading inside yesterday's range. Now, let's back up for 1 second. Talk about the last 3 sessions. Crude prices have been substantially weaker. We've really been selling off. Came down to around that 105 area yesterday. As I mentioned earlier, we were hanging out there around this morning, around that 105. 105 just so happens to be in the November crude oil about the 50-day moving average. So we've really kind of seen that market come down. We're starting to get some consolidation here. Again, as I mentioned, so far price action today has been an inside day. So that tells me we're seeing, you know, this is a strong area of market consolidation. Yesterday was also option expiration for October crude oil options. And again, that pivotal 105 is kind of where this market is at. Now, even though we got a draw in crude oil prices, you know, we've really seen a lot of fear premium kind of coming out of the market, as we know, and as I've mentioned in a lot of these prior posts, and as I wrote, if you haven't checked out our eView monthly report that goes out, or you know, you should take a look at that. I wrote an article in there yesterday talking about the crude oil and the stuff issues surrounding it. You know, with this whole thing with Syria and the UN getting a little bit more involved and Russia kind of brokering this deal, it doesn't look like military action is going to take place anytime soon, if at all. So that's kind of helped draw prices down. But short-term technical indicators are now into a little bit of neutral, actually a little bit in the oversold territory, in my opinion. So that, coupled with today's EIA data of seeing a draw there, suggests to me that, you know, we might actually be in store for a small bounce up. So I think that's what traders should be looking for. Watch for possibility of a small bounce up, but ultimately I think prices are going to be heading back lower. So I've got some key areas I'm watching. If you're thinking about getting in on the short side of the market, give me a call, shoot me an email, and we'll kind of watch for this to possibly bounce up a little bit. Some areas I'm focusing in on, and then I think traders might want to look to get short in those areas, possibly targeting the market down to around the 103, 103 half area. So we've got a lot going on in that market. We've also got the Fed FOMC meeting here today. You know, it started yesterday, continuing today. We're looking for some commentary on that this afternoon, see if there's any tapering going on. And I think you might see some. Market seems to be anticipating a little bit. That does have the potential to possibly affect crude prices. So give me a call, shoot me an email. We can get into more detail. You can reach me at the number on the screen or the email address there on the screen. And of course, remember that futures trading does involve a substantial amount of risk. May not be suitable for all traders. Good luck and good trade.